At the Money Show Toronto, we're joined by Martin Cobb, Senior Vice President of Equities at Steinberg Wealth Management. Martin, thank you for your time.
I'm glad to be here, thank you.
So when it comes to analyzing a stock, what are the key metrics that you keep in mind to, look at the pros and cons of that company?
Yeah. The very first thing I look at is the balance sheet. I have learned from over 25 years of painful experience that you simply don't want to invest in businesses where there's a question mark over their ongoing solvency, their ongoing viability. Forget it, move on to the next thing. After that, my job and what I spend the vast majority of my time thinking about is what should this company earn? Now the history gives you some guide to that, and what people expect in the future will give you some guide. But I'm really trying to understand this business in a classic kind of Michael Porter sort of way. Its strengths, its weaknesses, its opportunities, its threats. What is the ongoing return on invested capital this business should earn, given its competitive positioning through a business cycle? Then when I put it all together, I try and work out what it's worth. Only then do I compare it to the share price. A lot of people do the other way around. They look at what the company's valued and they try and work out if it's a buy, a sell, or a hold. I try and ignore, very hard to do, ignore what other people are valuing the business at, what the market is valuing the business at, work out what I believe it's worth based on just understanding the company itself.
So when you shortlist a company that looks promising, what is then the other decision that you take to add it to your portfolio?
I always ask myself a question, I borrowed this from the maestro Warren Buffett. If the stock market was shut for 5 years, or 10 years, 15, would I be willing to buy it today? So when I look at a company in isolation, if the answer is no, don't even think about including it in your portfolio. If the answer is yes, I then have to compare it to the existing set that's in the portfolio. So I'm comparing it to those stocks, and I'm looking for something that's demonstrably cheaper or demonstrably better than I've currently got. I think this idea of a competition for capital, that every holding in your portfolio should have got there on its own merit, offer something unique, something better, something that improves your diversification and your risk-reward profile, that's great. So it has to stand alone, and it has to beat what we've already got.
Coming to the broader sectors, any particular industry that interests you and looks promising?
I like to go where there's a bit of pessimism or where something's been forgotten about. On a sector level, you could say today that financials are pretty beaten out. There's some good reasons for that. We all know the headwinds for the banking sector, in particular with lower interest rates. There isn't much growth, that's tough. But I actually think it's on the country level where some of the excitement is. And with this accent, you probably recognise I'm not from around here. Brexit, who knows? But the UK is the cheapest stock market in the world. Over 70% of FTSE 100 earnings come from overseas. There simply must be opportunities in the UK.
Martin, great insights there. Thank you for your time.
Thank you for your time. Thanks for having me.